High value trade setups are goals for each and every trader in Forex market. So what are the qualities that a trade setup needs to have in order to qualify to be a high value trade setup? I'm Wanjiru Gishangi from Forex Expert Trading Academy, and on this session I'll be taking you through how to identify different qualities to trade high value setups. Also, I'll be sharing my favorite quality combination, which is a must-have for high volume traders. So stay put. To all the members of the expert family, we appreciate your continued support. To help us grow, leave a comment on this video and also all the videos, letting us know of a video you'd want to see in future. If you're new to the family, subscribe. Click on the notification bell so that you're notified every time we have new content, and also leave a comment, a like or a thumbs up on this video. We learn and grow. What is a high value trade setup? This is a setup that has high rate or high success rate or high probability of being a success. Now, to have a high value setup, it needs to have some of these qualities. So we're going to go through each one of them. And note that a trade setup can have a combination of 2, 3, 4, or even more of these qualities. So if the more the qualities you have, the higher the success rate of that trade setup. So let's get started. The first quality of a good trade setup is trend flow. What is the trend? For the beginners, the trend is basically direction of the market. Is the market pushing upward, or is the market pushing downward, or is the market pushing on sideways movement? So if your trade setup is within the trend, there is usually the saying of work with the trend or trade with the trend, meaning if you're on a buying cycle, the market is expected to be pushing upward, having impulsive moves to the top and reactive moves or retracement to the downside. So you are supposed to trade buy. You only take buys on these areas. So if you have a buying opportunity on a buy trend, then we say that your trade has the trend flow quality. And if you're on the other side and you're having a sell side, the market will be pushing lower and lower. Therefore, you're expected to take your sell trades at every retracement. So when you do a sell trade on the selling cycle, sell on the selling cycle or selling trend, we say that that type of trade that you're taking has the quality of a trend flow. You're not counter trading. You're not trading against the trend. You're trading with the trend. If you're in a range, now sometimes the market may not always push up or down. Sometimes it can have this horizontal, or it can be on a range where it has a floor and a ceiling. So if that happens, then you can have the resistance at the top and the support at the bottom, and you'll be taking both ways. You'll be trading at the top, you take your sells, and at the bottom here, you'll be taking your buys. So if you do this kind of trading where you're doing the buys on the buying cycle, the sells on the selling cycle, and the support and resistance on the range, then we say that you are trading with the trend. Note, do not trade against the trend if you want to take high value trade setup, because you'll be going against the trend flow. An example of that on a chart. So if you're on a selling cycle, you expect the market to first hit a top and give you an institutional reversal pattern. This is something that you can learn from the video on reversals. So you want to have, we have a 1, 2, 3 to the top, creating that high that wasn't broken, and we get a lower high. Get a lower high, meaning now we're done with that top, or we're done with that peak, and the market is going to flow down. Now this flow down means that we are on a selling cycle. On the selling cycle, you are expected to wait for this retracement and take your sell. Every time there is a retracement, you'd be taking your sells down. Now, by so doing, we say that you're trading with the trend downside, and therefore the kind of trades you're taking is having the flow or the trend flow. On the buy side, you want to have a peak low or a source low. Again, you want to see a reversal pattern, an institutional reversal pattern, and then you want to have the trend to the top side. How you identify trends? Of course, you can watch the other video on trend flow or trends or different types of trends, or you can learn that from the beginner. Now we have this upward movement, meaning we are having impulsive moves to the top, reactive to the bottom side. So every time there's a reactive move, you have an opportunity to take buy trade. Now, if you're taking buy trades on a buying cycle, then we say that you're having a trade that is of high quality because you're trading with the trend. Suppose you don't have a buying cycle or a selling cycle, you have a range, both at the bottom side and a resistance point on the top side. Now, from the support and resistance video, in a ranging market, you're expected to have support at the bottom side and resistance at the top. Watch the support and resistance video for the rules on how to mark the zones on support. Note that support should not be a line. It's supposed to be an area. Now, on the resistance, you'll be taking your sell trades down, and at the support, you'll be taking your trades up. You do that until the market breaks out of that range. Quality number 2 is the stage of a trend. Now, with the stage of the trend has 3 stages. It has the start, where you have the institutional reversal pattern. Then there is the middle part, and there is the exhaustion, or the end of the trend. Now, depending with the stage at which you take your trade, it will either be of high quality, good quality, or poor quality. If you take your trend as the start, this is the best area to take your trade because it's of the highest quality. If you're on the buying cycle, take it from the start of the trend. If you take it at the middle, it has good quality. See, it's of good quality. So we have best, good. And here, if you take it at the exhaustion, this is of poor quality. So if you're going to take high value trade setup, you either take it at the start or at the middle point. If you're on the sell side, of course, you'll be pushing down. So we have the start at the top since you are pushing down. We have the midpoint and we have the exhaustion. If you want to take high quality trades, take them from this end. If you want to take a good quality, take it at the middle of the trend. And of course, at the end here, you have poor quality. So an example on a chart. So we have this selling cycle starting from this area here. So we have the start from the peak. When this high did not break this high, then we see that it was the start of our selling cycle. So you can take the sell trade from this area with the counter trend, so you can get in here. This is of very high quality, very high value, or very high quality trade setup. If you miss this, you can wait for the mid with this retracement. So this flip zone area here gives you the middle of that trend. Again, you can take very good quality sell trade on this area. But if you miss the two and wait for the market to have the exhaustion stage, remember we have 3 stages. We have the start, we have the middle, and we have the exhaustion. If you start now taking trades when the trend is exhausted, there are chances that this trade may reverse on you, or maybe you're going to not make as much money as the traders who traded either within the start or. Pay attention to where you're taking your trade. So go to your higher time frame, mark the stages of the trend so that you're not taking trades when the trend has already exhausted. Quality number 3 is the multiple time frame confluence. Multiple time frame confluence. Now, confluence basically means confirmation. How many time frames are pushing in the same direction as your trade setup direction? So you can either have 2 time frames, you may use 2 time frames to trade, or even 3. But the more time frames that are confluent, or the more time frames that are moving in the same direction, the higher your value of your trade setup, or the higher the value of the trade setup. So if you're going to take a high value trade setup, at least have 3 or 2 time frames that are pushing in that same direction. Let's take an example where you're using 3 time frames. You're going to use 1 time frame as bias. Bias means the trend. It will be giving you trend. For example, if you use the daily, that will give you a cycle. So let's say you're buying on the daily. Then for the setup, you're gonna use H4 for the setup. So the setup can either be a chart pattern break, or can be market structure, or can be pure price action. Then you're going to get a lower time frame for entry. So here you can have M30 or M15, whichever you choose. So when all these 3 are pushing in the same direction, we say that your trade setup has multiple time frame Confluence. Remember, this is a value. This is a quality for high value. Make sure that all the time frames that you choose are pushing in the same direction. So on a chart exam, if you're liking this video so far, give it a thumbs up, leave a comment on the comment section, and share it with your trading community. Example where we have multiple time frame conference. This is USD CHF. You can see that on the daily, we're pushing lower from a high point. We're pushing lower. The opportunities to take would be on the sell side. Then on the H4, of course, the market again is pushing downward. Therefore, any opportunities would take will be on the sell side. And on a lower time frame, the H1 here, the market is also having high value trade setups to the downside. So when 3 time frames are showing the same direction, then we say that is a high quality of a high value trade setup. There is confluence. There is no particular time frame that is pushing in the opposite direction as what we have chosen. So that is a very good quality. Quality number 4 is a price momentum breakout. Now, when we talk about breakout, let's say the market was on a range at some point or at an exhaustion point. You want the market to break out of that with a very heavy momentum or a very heavy candlestick. Now, this break should be very heavy. It can have a momentum candle or can be influenced by an economic event. This break will determine the direction that any future trades that you may take. So let's say this was a range, and then there's some economic event that gives you a very huge buy candle to the top side. It means that whatever other trade you take must be in direction of this momentum breakout. But if the breakout was not momentum, then now that's not a quality that you want to pay attention to. So in the event that this market now retraces back, don't take this sell trade. Wait for the market to trade to the top side. Why? Because you're being guided by this momentum breakout. Now again, if you're on the sell side and there was some accumulation there and the market breaks out violently to the bottom side, you know now that is a guide that the only trades that you're supposed to take would be to the sell side. So in case there is retracement back, don't take that buy. Don't get trapped on that buy. Wait for the market to push lower because your guide is again the break momentum. Now the example on a chart, this accumulation part here, then the market breaks this trend line, this counter trend line, breaks it with a very huge, you see this is economic event, it's a very huge candlestick. It breaks the trend line to the top side with a very huge momentum candlestick, what we call the momentum break. Now any trade you take from here should be guided by this momentum break, meaning do not get trapped by these red candlesticks. Only look for buying opportunities, and you can see that that trade moved really heavy from this momentum break. So pay attention to all the breaks that you find, whether it's a trend line break, whether it's a range based break, whatever breaks you get in the market, if they are momentum breaks, trade in line with that break. Number 5 is the higher time frame bias. Now we know that higher time frames are what will guide the market. So any higher time frame or trend that you get on the higher time frame will hold more than what you may get on the lower time frame. For example, if you have market structure on the daily, that is going to give you higher value than if you had the same market structure on a 1 minute chart or 5 minute chart. So before you take a trade, check what the higher time frames are doing or what the higher time frame is saying. If you have a buy on the higher time frame and a sell on the lower time frame, you have a high probability trade. It's better if you could take one that is in line with the higher time. Number 6 is the FIB levels. Now, there are people who trade the FIB levels and extensions. Now, when we get to FIB, there are 2 most important points. Remember, a FIB, if you've used a FIB, it will have 100, it will have a 0, at the middle it will have a 50, in between 100 and the 50 there will be a 61 point something, 0.8, and down here there will be a 23 point something. Now these points, the 50 and the 61, are very, very important, or rather they are crucial points, the 61 and the 50. I also like adding this area between the 50 and the 60, also a very important point. So when you're trading or you're using the FIB levels, pay attention to the 50, the 61.8, and also the area between the 50 and 61. Why? Because mostly in this market, out of experience, it will respect these FIB levels every time there is a retracement. An example on a chart, we have this push from the top to the bottom. So if you're doing a sell, you want to place your FIB from a swing high to the swing low, then you'd wait for the market to retrace either to the 61.8, which is a very, very important key area. You want to check what the market does when it gets to this level. Again, you can see all these weeks or rejection to this area. There is no candlestick body at the top of this area, meaning it's giving you rejection vibes. Therefore, you can only look to sell to the downside. And in case there is other retracement, of course, they will touch either the 50 or the area between the 61 and the. Now, you use the FIB when they are retracement, or to know at what area that move is likely to retrace to. In future, I'm going to do a video on FIB so that we have more details on that. But basically, FIB extensions or FIB levels will help you to know at what point to join or at what point the retracement are likely to happen. Then we have what we call divergence. Now there is a video on divergence, how to trade divergence and the different types of divergence we have. We have the shallow, we have the wide divergences. So pay attention to that video so that you'll be able to trade divergence. Divergence is super profitable if you trade it using the RSI, if you can use RSI or MACD. So there's a video on divergences. Pay attention to that, and it's gonna give you one of the most profitable volume trades that you ever enjoy in this market. Remember, different divergences will give different payouts, so pay attention to that, and also watch the divergence video so that you may learn how to trade that. But this usually gives very high payout. Quality number 8, point of interest or axis, or what we call confluence zone. I've done a video on key areas or how to identify the point of interest on a chart, so you can refer to know the different types of point of interest or the axis, how to identify and how to mark them. But the POI are points that give very high quality trade setups if you may master that. A chart example on point of interest, you see this area here has been a flip zone. It was identified first as a demand zone or a buy zone. It was broken by a red candlestick to the downside, becoming a sell zone. The market retested, but it did not sell. It was broken to the top again and retested as a buy zone, therefore changing from a sell zone to a buy zone. Therefore, any future trades would be to the buy side, meaning this area here is what we may identify as a flip zone, areas where money has changed hands. We also have an EMA here. This is a 50 EMA. Remember, I mentioned that the market loves 50 EMA. So inside the flip zone and with the EMA, we may call this area an axis. To make it even more stronger, we have the trend line to the top. And you can see that the trend line is still pushing inside that flip zone. Now, this area here, where we have a moving average, we have a trend line, and we also have a flip zone at the same area, becomes a very high volume trade setup or a very high value trade area, where if you take that trade, it's a sure trade that is going to give you good pay. And you can see with the break and retest, it was an easy entry with this candlestick pattern, giving you a very good pay from that trend line. You could have easily made 236 pips, or if you held it to the break of the trend line, that is 368 pips. So trading point of interest or trading key areas is one of the most profitable trading style, but you can also use the POI or the point of interest as a quality of a good trade setup. Quality number 9 is moving averages. Now note, MAs will push differently with different items and different time frames. So don't pick one moving average and apply it to all markets. No. See which moving average works for what market and of course what tradable item. And of course there is a video on how to use moving averages, therefore you can also refer that. But for the sake of this video, we'll be using the simple MA. A chart example, here I'm using an SMA on a higher time frame to check the trend or to show the trend. This is 100 SMA. I'm using it on the daily to show the start of the trend and of course to confirm that I'm still pushing downward. And if I'm on the buy side, again, I'm gonna use the same 100 SMA for trend purposes. This is to show me the beginning of the trend and also for confidence that I'm still supposed to be pushing upward. Remember, the 100 SMA will work best on higher time frame. Don't go using the 100 MA on the 15 minutes and talk about the trend. No, if you want the higher time frame trend, use it on the daily, the weekly, or the monthly. That way you'll be able to tell the direction of the market from the higher time frame. Quality number 10 is the trend line flow. Now, when you're trading trend lines, you want to have as many touches to your trend line as possible. And if your passive trend line is not touched, you want your counter trend line to also have, remember there are different types of trend lines in this market and you can watch the different types and also how to apply them in the market on the trend line video. So refer to the trend line video so that you learn the different types of trend lines and also how to use them. A chart example. So here we have Euro GBP on H4 and every touch of the downward trend would be giving us selling opportunities, while every touch of the uptrend would be giving us buying opportunities. And the change, where the change is happening from the buy to the sell, will of course give you the break of the trend line and the retest. Remember, you join at the retest, you do not join at the break. I mentioned that in the previous video. So make sure that you're paying attention to your entries. If you're using the trend line flow, you only get to join that trade at the touch of the trend line, paying attention to break and retest. Quality number 11 is what we call chart patterns. Now, there are different types of chart patterns. If you're liking this video so far, give it a thumbs up, leave a comment on the comment section, and share it with your trading community. So we have triangles, we have rectangles, we have channels, we have wedges, and so forth. Now, you need to learn these different types of chart patterns and also learn what their purpose are. They're either there for trend continuation based on where they show up. Remember, and be very keen on this, any chart pattern can be a continuation pattern and it can also serve as a reversal pattern. It only depends with where they show up. At the exhaustion of the trend, then they will serve as trend reversal patterns. So we do not have patterns that are specifically for trend continuation or trend reversal. They may serve any purpose. It only depends with where they show up. At what stage are they showing up on your trend? And of course, I have a video on chart patterns. Therefore, you can always refer to that video to learn the most popular and also the most reliable chart patterns that you can use. A chart example, this is USD JPY. You see the market has been coming from the top side and created this channel to the bottom side. So with the channel, you can actually take trades every time the market touches the top. That is a sell opportunity. To stay disciplined, you do not need to counter trend. Since you are pushing from the top, only look for selling opportunities because they are the ones that will give you high value trade set. Remember, you can watch the video on chart patterns to know how to use the different chart patterns, and of course the most probable or the most profitable. Not all chart patterns will give you high volume trade setups, so watch that video to know which trade setups to actually pay attention to. Quality number 12, these are the candlestick patterns. Now, there are different types of candlestick patterns based on how they are formed. Is it formed by one candlestick? Then it's going to be a single candlestick pattern. Is it formed by two? You call it a double candlestick pattern. If it's formed by three or even more candlestick, we call it multiple candlestick pattern. Now, based on how they are formed and at what point they are formed, they become stronger based on where they show up in the market. Now, a high value trade setup will have a candlestick pattern forming at key areas. If these candlestick patterns show up on a key area or a point of interest, then the value of that trade setup goes higher. So pay attention to that. Remember, I have a video on candlestick patterns to show the ones that are very strong. They are very strong candlestick patterns. For example, the engulfing candle pattern, that is very, very strong. So watch the video on candlestick patterns to learn the patterns that you should pay attention to and also how to use them. Chart examples. So this is USD CHF 1 hour chart. And at key areas, we are having different candlesticks. At this area, you have this candlestick pattern, which is a reversal pattern. And you can see from this pattern here, the market pushed down. From this area, again, there is another candlestick pattern. This is a single candlestick pattern, and the market pushed down. Then we have a double candlestick pattern. This is very strong, is what we call the engulfing candle. And from this area, the market pushed down. These are multiple candlestick pattern, where a pattern is created by many candlesticks. This is what we call cut of woods, okay? Or this is basically M formation, where we're pushing up, pushing down, pushing up again and down. And from this area, you see that pair was really high value. So the candlestick patterns can also create or can also give high value. The candlestick pattern, based on where they form or how they are formed, they also add to the quality of a trade setup. So pay attention to the candlestick forming or candlestick patterns forming in different key areas. As long as they are in line with the trend, then you can use them for entry and also to trade high value trade setups. Quality number 13 is the trend change confirmation. So let's say you're on a buying cycle. The market has been pushing higher and higher, and you get to the end of that trend, and then there is the accumulation or some range, and the market needs now to push to the downside. At what point do you join your trade? One, there will be the trend line to the top. You can either join with the break, you wait for the break of that trend line and retest, and then you can join this new cycle to the downside. You can also pay attention to the price action around this area. Was there an engulfing to the downside? If that was so, you can wait for a retest of that engulfing candlestick pattern. It can also be a chart pattern in this area, and the break to the downside would also mean that it has been confirmed that we are reversing. Or you can go to a lower time frame and trade what we call break and retest. So if you come in from the top, or there was a range, you expect the break downside and then the retest. You can go to a lower time frame and trade market, break and retest to break. Remember, don't join the trade on this area. Don't chase it. Don't chase the trade. Wait for the retest. Okay, after the break, there's always a retest. Wait for the retest, then join. And with the retest, again, I mentioned on the liquidity video, don't get yourself trapped because there will be liquidity here. So don't make yourself easy liquidity. Pay attention, be patient, sit on your hands, wait until the liquidity is taken out with the retest and you have a good high value trade setup. That example, this is USD on the daily. With the SMA, we've been pushing to the top side, and with the break of the SMA and retest, it means that there is a possible trend change. We also have this formation of a lower high instead of a higher high, which also is also a signal of a trend change. We also have a trend line slanting to the downside, creating this axis area or a point of interest that also has the MA moving through it, the trend line, making this a very strong or high quality axis point. So if this continues, then now that is a trend change confirmation. The last and not least is the support and resistance zone. If a trade setup shows up at an area of support or resistance, it means that it's of high quality or high value. Remember, you buy from the support, you sell from the resistance unless they are broken. Refer to the support and resistance video for rules on how to trade support and resistance. Chart example, this is USD CAD on the daily. This is a buy area that was broken to the bottom side by a red candlestick, creating a sell zone. But there was a momentum break to the top side, taking it back to being a buy zone. Now, from this point here, it becomes a flip zone. A flip zone is a very high quality value point. So once the liquidity was taken out, which is also a high quality for a trade setup, the retest back to this buy zone gave a very high value trade setup. And you can see this was the heaviest. As far as this trend is concerned, this was the heaviest. It gave over 1200 pips. Let's see how many pips that was. With this candlestick pattern, for entry, you'd have a total of 1,205, 1205 pips. That was a very heavy exhaustion point kind of trade. And why was it high value? Because it came from a support and resistance zone with a good candlestick pattern, and also the MA. It came from an axis point, giving it very high value vibes. Now, these are the different types of qualities that you want your trade setup to have in order to qualify to be high value point. Note that a trade setup may not always have all of them, but if you can have at least 3 of these qualities in every trade you take, then that means that you're trading high value. Now, what is my favorite combination? My favorite combination that works almost all the time when it shows up, and I want to have a moving average, a trend line flow, and of course that trade setup must be within a support and resistance zone. Note, to learn more on this, you can get a copy of the ebook 5. It has talked deeply on these kind of qualities, and you can choose whichever trade qualities that you'd want. Thank you so much. Until next time, I wish you the very